It.
Got it. Hi, Jennifer.
Hi, Lorraine.
It's great to have you here with us today. This is
Great.
wonderful.
Yeah.
We're broadcasting out to Boom members and guests on with Jennifer McLean from MortgagePal, who's been a Boom brand partner with us now for about a year, actually. And today she's going to share some really great mortgage insights with us, pre-COVID versus today. So that's quite the topic. I know there were a number of members that were quite interested in learning more about this. But Jennifer, why don't we start with you telling us briefly about yourself?
Okay, sure. My name is Jennifer McLean. I'm a mortgage broker with a company called MortgagePal, and I head up the Alberta team here in Calgary. And I've been with the company for just under 4 years. I've got a wife and 2 kids and a dog. We just like spending time outdoors, spending time as a family, and anything related to music.
Isn't that wonderful? That's great. Thanks for sharing that.
Yeah, no worries.
I have a dog too. I think we talked about our dogs in one of our last calls.
Yes, we did.
Mine's senior, yours is young. So on opposite ends.
Like the younger version of yours.
Yeah, exactly. So today we're going to talk about mortgages in particular. And I know that the real estate market seems to be quite active these days. So I know I'm confident we're all going to take something away from this that's going to help us. So really, it's about learning what's changed in the real estate mortgage industry over the past 12 months in particular. So much has changed in the world. And so today, though, we're going to focus specifically on mortgages. So my first question for you today, Jennifer, is, what has changed in the mortgage world since the pandemic began?
Yeah, a lot has changed, actually. So none of the actual federal guidelines or insurer guidelines have changed. But the way that lenders are reviewing applications and the decisions they are making based on what they're seeing has changed. So there's a lot more scrutiny going into these mortgage application reviews. And what we're finding in general is that borrowers have to jump through a lot more hoops than they used to.
Which is probably making it difficult for a lot of people. And I know that there's been so much change in how we're working. So many people are working from home versus in an office setting. And many are saying that moving forward, it's going to be that hybrid model versus everybody going back to the offices. Yeah. So that means they need a bit more space now, doesn't it?
Yeah, for
so
sure.
So that's heating it up, isn't it? So have the interest rates changed since the pandemic began?
Actually, they've changed a lot. So yeah, before the pandemic, so last fall, like last February, early March, we were seeing interest rates above 3%. That was pretty much they were around 3% for fixed and variable. And variable rates were a terrible option. And the whole previous year, no one bought a variable rate because they were not any better than fixed. So what was the point? But over the course of the first few months of the pandemic, we saw interest rates go quite a bit lower, and they had been steadily falling throughout 2020. And I would say by the end of the year, we were seeing interest rates well below 2%, probably about 1.5%, maybe a little bit more, depending on whether you were going fixed or variable. And now we're seeing them on at least fixed rates, we're seeing them on the rise again. Variable rates are still lower than they've ever been. And fixed rates have come up about 30 basis points in the last month or so. So you can still get a mortgage rate at around 2%, maybe a little bit higher, and maybe a little bit lower if you're doing fixed. If you're doing variable, then you're going to be probably somewhere around 1.5%.
Still amazing interest rates.
The cost of borrowing is ridiculous. It's if you can get a low interest rate like that, then take all the rest of your money that you're saving and invest it elsewhere for a much higher return.
So what about from a down payment perspective? When you're doing a down payment for the purchase of that home, what has there been changes?
Slight changes. The guidelines are still the same. So you can still buy an owner occupied property with a minimum 5% down, and you still need at least 20% down to buy a rental or investment property. So that hasn't changed. But there have been, again, the way that lenders are reviewing down payment documents is a bit different. Um, there is a history of money laundering in the Canadian real estate market, and so lenders have to do their due diligence to ensure that they can verify the source of funds for the down payment and make sure that they do belong to the borrower.
Mhm.
And so they will look at bank statements, usually the last 3 months, to verify any deposits coming into their account. If there are large deposits, they need to see the source of those funds. That might be more bank statements, it might be receipts. If there were wire transfers, receipts of those. But the biggest change I've seen is with gifted down payment. So you can access a gift from an immediate family member typically, and usually, what the lender would require in that case was a signed gift letter from the donor, as well as confirmation that the funds have been transferred into the borrower's account. Now we're seeing increasingly that they're actually wanting to see the source of the funds from the donor's account. So they want to see bank statements from mom, dad, brother, sister, whoever's giving the gift, a 3 month bank statement history showing where those funds have come from. So they're doing more work to make sure that those funds that are being gifted actually belong to the giftor.
Incredible.
Yeah.
That is a significant rise in due diligence on their behalf, isn't it? I have a
Yeah.
question about the 5% down. I'd always thought that it was 5% down for first purchase, but are you saying that it's if you're living in it, you can still do 5% down?
Yeah, that's a really common misconception. I talk to people all the time that think that they can only put 5% down if it's their first home. But no, any subsequent home you buy, as long as it's an owner occupied property, then it can be what we call high ratio insured. And that's a mortgage where you put less than 20% down.
That is interesting. I did not realize that.
Yeah.
So when it comes to qualifying for mortgages, um, how are they looking at what the person applying is holding? So that's you don't need to have 5% just for if it's first time, so that's great. But what else are they looking at when they're considering whether or not they're going to lend you the money that a traditional institution in order to get that mortgage?
Yeah, there's four big things that we look at with mortgage applications. So one is the down payment, as we've already talked about. The next one is credit. Third is income, and then the fourth is the property itself. So with income, because the last year has brought a lot of fluctuation with people's employment situations, it's become a little bit more complicated to verify income and just to know what amount of income we should be using. If the person is on a salary, then that's easy. We just use the salary that's stated on their job letter.
Mhm.
But if they are hourly wage earners, then their 2020 T4 might be quite a bit smaller than it was in previous years. So we have to be able to kind of figure out what amount should we be using. If they're self-employed, that's another thing. The lender wants to make sure that we're not just looking at the historical revenue that the business is earning, but how have they been doing in the last 3 months, for example. So we want to see bank statements to see income deposits coming in, to see how the business is flowing. How is it running now in the midst of this pandemic? So again, more burden of documentation on the borrower, just to be able to confirm what income we can in fact use to help them qualify for that mortgage. Credit, here's another piece that we kind of were concerned about with all of the deferred payments that were happening last year, not just on mortgage payments, but people were deferring credit card payments, loan payments. So we were told that those deferred mortgage payments would not show up on our credit bureau, but that hasn't been the case. So we've been seeing deferred payments showing up on people's credit bureaus. It hasn't negatively impact credit score, but it is showing that they're there, that the borrower did in fact defer payments. So what the lender is requiring is that none of their payments are in deferment right now. So if they deferred in the first few months or first 6 months of COVID, fine, but they got to make sure the story fits and that they're not deferring any payments now.
Thank you. Again, much more strict. Is this increasing the length of time it's taking applications to be processed?
Yeah, somewhat. So I think there's a couple things at play here affecting turnaround time because originally, I mean, normally a turnaround time from a lender will be somewhere between 1 and 2 business days, where they'll be able to review the documents, review the application, and provide a commitment letter, which is a conditional approval. Now we're seeing the turnaround time take quite a bit longer, somewhere between 2 up to 7 days, depending on the lender, sometimes maybe more than that. So that is being impacted by, yes, their due diligence in reviewing documentation. A lot of times they have to have insurers sign off on it as well. Also, just the market is flooded right now with purchases. So lenders are swamped. I know many of the lenders that we work have been busy hiring more staff, more underwriters to do more files because so many more people are in the market right now than ever before.
So if you
Yeah,
are in the market, how long should you be allowing for that process?
yeah. So this is a tough one because if you're in a market like Toronto or Vancouver, you're working with realtors that are really pushing you to go in to write an offer unconditional, no conditions. And as a mortgage broker, I never recommend this because that puts a huge amount of risk on the borrower, on the buyer. If anything were to be go wrong with the financing approval, or if there was something there with the property and the appraisal came in less than what the purchase price is by a lot, the client is on the hook. The borrower is on the hook for that purchase no matter what. So I always say, you need to have a window of time to get your financing in place and make sure you have that full approval with the lender. And ideally, we'll have at least 1 week, 1 to 2 weeks. I know in Ontario, Southern Ontario, and BC in the GTA or GVA, people are writing conditions of 3 days. So we just work with what we got. But I know here in Alberta, you can have a little bit more time. So I will see conditional offers of 10 to 14 days. But that's ideally you're going to give yourself at least a week to get your financing done. And then if that's the case, we just choose which lender we are going to work with. Whoever is going to give us the quickest turnaround time often is the one we decide to work with.
Mm-hmm. Thank you.
No worries.
You mentioned appraisals. So what's the
Mhm.
process these days? Has anything changed with respect to appraisals?
Yeah, a lot changed. I mean, during the height of COVID, appraisers weren't going into homes, just like realtors weren't doing open houses, that sort of thing. People were buying houses just based on video and photos.
It's so
Appra-
hard to imagine that, isn't it?
I know I could not. I
I don't
couldn't.
know. I don't know if I could either. Yeah.
I know it would be a big risk, but yeah, the appraisers, it was the same thing. So they would go to the property, they would look around the property, and then they would have either the listing agent or if it was the owner send some photos, and that would be the extent of it. Now, depending on what province you're in, some appraisers are going back into the homes now, but others aren't. We see a lot more restrictions in Ontario, for example, where there's still many municipalities are still under lockdown measures, so they're not allowed to go into the homes. But yeah, it just depends on where you are. But yeah, it has definitely changed a lot. And I think appraisers have been busier than ever too. So we are seeing a little slightly longer turnaround time on their end as well.
Has there been anything else that's changed when you're looking at purchasing a home since COVID? The process itself. Have you seen any other changes?
Um, I mean, yeah, I think there's been a number of changes for the buyer. Um, we touched on that, maybe not being able to go into the house itself. But as far as applying for a mortgage, yeah, there's been a lot of little changes. I think we've covered most of them.
Yeah.
But I have noticed that a lot of clients are able to do all the signing without actually meeting with their lawyer in person. So that's been a huge change for Canadian real estate law. Is they would never dream before COVID of not meeting with their clients face to face to watch them sign the mortgage documents in wet ink. But that all changed with COVID. So we're seeing a lot more people doing their signings digitally over Zoom calls, that sort of thing. So that's been a pretty massive change.
I suspect the post-purchase journey is a bit different too. If you think about it, there would be so many different things. Like, how do you manage movers? How do you
Hmm.
manage any work that might be needed to be done on your home in advance of you going in? How do you manage any of those things? And the process will all have shifted since the pandemic.
Yeah,
Yeah,
yeah, for sure. Yeah,
yeah.
it's been an unusual time, but I don't know. I'm starting to see the light at the end of the tunnel.
I think we're all hoping we see that light.
For sure, for sure.
Um, how about from a purchase perspective? Is it a good time to buy, do you think, from your perspective?
I mean, again, cost of borrowing has never been lower. So if you're looking for a time to buy where you're going to save on interest payments, then yeah, it's a great time to buy. But for a lot of markets, it's a seller's market. So you are going to be up against a lot of competition, even here in Calgary, where for the last 6 years, the market has been a buyer's market. It's been in a slump, let's just say. Now we've seen it reversed, and there's multiple bids going in, and people are starting to spend a little bit more on the home purchase than they did before. So, um, is it a great time to buy in a seller's market? No, you're not going to get a great deal, but really, what it comes down to is it the right time for you to buy? So you have to take a look at your situation, your income. How much money do you have saved for down payment? What assets do you have? Because the lenders are looking at that too. They want to see that you've got some money to fall back on should you hit hard times again. Um, and do you have a need for a bigger space, or do you have a need to buy now? I think real estate is always a great investment. So it's always a great time to buy if it makes sense for you.
Thank you. Here's something I've been wondering about too. There's been it seems that people are looking to shift where they live as well. And I don't just mean from a condo into a home,
Hmm.
but from a demographic perspective, they're shifting outside of the cities to more rural settings, et cetera. Have you seen a lot of that in the work that you're doing?
Tons. Yeah. So I've seen it mostly in places like Ontario, Toronto. People are escaping the city because they don't need to be there. They don't need to pay those outrageous home prices. And so they're moving out of the city and into smaller cities and smaller towns. And so we're seeing a huge boom in real estate in those smaller markets. And it's been unusual because before it was more of a kind of sleepy towns like Orangeville or something like that, where St. Catharines, where it wasn't a very popular market, but now it's full of people who've left the big city because they are getting better prices and they can buy a bigger home, and they don't really need to have access to the city anymore. So yeah, we've seen a huge change in that as well.
I've heard a lot of BC towns are really struggling with capacity issues,
Yeah,
and
inventory. Yeah,
Melbourne,
exactly.
Victoria, and a lot of those folks on the island, yeah, same thing. So it,
Yeah,
it's
yeah.
it's interesting to watch from a workplace perspective, the shift. And as you know, we mentioned at the top of the session, there's this hybrid that people are going to be looking at. So that's great. And it does allow even employers now to be really expanding their reach when it comes to filling positions as well. Because if you can work and live anywhere, then you have that option. It's great. So
For sure.
what about from your perspective, so you're a mortgage broker, and
Mhm.
I think that there's a lot of questions around what is a mortgage broker and why would I choose a mortgage broker? Maybe you could just tell me about being a mortgage broker. What are the advantages to an individual considering that over a single bank, for example?
Right. Yeah. So, I mean, a mortgage broker, we act as a bit kind of like a matchmaker between for our clients and the lender. So we have access to almost all of the lenders across Canada, and my brokerage, we're part of a large network, so we have access to many different lending resources, and great relationships with different lenders, so we can get really tailored products for our clients. So there is a benefit of working with a broker because we're able to do the work of finding the right mortgage solution for our clients. If they go to the bank, they're going to end up with the only kind of bank mortgage that they have. I do get a lot of people who say they're shopping around for a mortgage, but it's like, if you work with a broker, you don't need to do that. We can do that for you. So it saves a lot of time and hassle, and we're going to be able to source out a really great rate option for you, and also find a mortgage that's going to have the right amount of flexibility for you as you're going through your life, if you need to make any changes within the next 5 or 10 years.
Thank you.
Hmm.
So we're almost done, but I just wondered if you wanted to leave any insights with the viewers today. Any final thoughts?
Sure. Yeah. I mean, things are still changing. The market is still changing. I believe we're going to still see fixed interest rates going up. Fixed rates are priced on the Canadian bond yield. So the Canadian 5-year bond yield right now has been moving up, and that's why we're seeing fixed rates going up. Um, so, if you're looking to buy in the next 3 to 4 months, then now is a really good time to lock in. Lenders will do a rate hold for you, and they'll hold it for up to 120 days. And so it's a good time to just lock into a rate while you're working on finding your home. But variable rates are also very, very attractive right now. I know people are a little hesitant to go variable because they think, well, that could change. But the variable rates are priced differently than fixed. They're based on the Bank of Canada's overnight lending rate. And that is what determines the bank and lender's prime rate. And so that variable rate is basically a discount against the prime rate. So it will fluctuate when the prime rate changes. However, the Bank of Canada has said publicly that they are not planning on increasing, even thinking about increasing rates until at least 2023. So, with the difference between fixed and variable, we're seeing about a 0.65% difference between fixed and variable. It's a really good, attractive offer to go with a variable rate, knowing that right off the bat, you're going to be saving that much interest for the at least first 2 years, maybe more. And Bank of Canada, generally, when they're increasing rates, they only increase them by about 0.25% at a time. So even if they increase two increases, you be saving money to your fixed rate counterpart who took out a fixed rate at the same time. So there's a
Right.
lot of opportunity to save quite a bit of money
Yeah.
if you go with variable. So something to think about.
Wonderful. That's great. Thank you for those insights. One final thing, somebody's asking whether or not you work outside of Alberta. We're located here in Alberta. You're located in Alberta. We have
Yeah.
Boom members across Canada. Are
Yeah.
you able to help our members wherever they are?
Yes, definitely. So I'm with MortgagePal, and we are a national online brokerage,
Mhm.
and I'm licensed myself in 3 different provinces. So we can actually help clients all across the country.
And if you can't help, you can certainly help them find somebody who can, right?
Precisely. Yeah,
Okay.
there's somebody within our team that is able to help them no matter what province they're in.
Thank you so much for sharing your expertise with us today. This really
It's
has
a
been so
pleasure.
educational and very, very timely. So my takeaway is if you're thinking about buying today, it's not that it's a good time or bad time, it depends on your own state, but now is the time to be looking at getting your financing in order. Boom members, just a
Yeah,
reminder,
talk to me.
Yeah, talk to Jennifer. And Boom members, you do get a $750 from Jennifer when you do your mortgage through her and MortgagePal. So you can check out that online on the Boom that website. All you have to do is log in. You know how to do that. Thanks again to everybody. Thank you very much, Jennifer. And we look forward to seeing everybody at our next online live event. Take care and have a great Wednesday.